Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 20th of November 2020, and we're reporting on the recent surge of Bitcoin, while gold and silver only just managed to hold their ground. So let's investigate. Now, before we talk Bitcoin, a quick shout out to our videos produced earlier this week, and to which we've provided links below. Yesterday we had our gold and silver midweek financial update. The day before, why solar panels and power may not be silver's saviour. And then on Tuesday, why reported silver supply and demand does not equal price. Monday, how much will silver be worth if the dollar collapses? And of course, last Sunday, which will then be repeated this Sunday, episode 1 of Are We Reaching Peak Silver? Of course, this Sunday will be episode 2. Now today, we've seen gold and silver rise a little, but the big story is Bitcoin. But first, let's take a brief look at what has happened to precious metals and why. Reuters article, dated 20th of November 2020, updated at 3:13 p.m. Gold rebounds as Mnuchin rekindles stimulus hopes. Gold bounced on Friday after U.S. Treasury Secretary Steven Mnuchin said that negotiations on stimulus measures will continue, boosting the metal's appeal as a hedge against likely inflation. Spot gold rose 0.5% at $1,876 per ounce by 9:47 a.m. EST, which is the equivalent of 14:47 GMT, and was down 0.6% for the week. US gold futures rose 0.8% at 1,876. Mnuchin said he and White House Chief of Staff Mark Meadows would be speaking on Friday with Republican congressional leaders on negotiations with Congress on more economic support. The thoughts of stimulus talks moving forward once again has supported gold, as we realize central bank liquidity and fiscal stimulus measures continue to be a driving force behind this market, said David Mager, Director of Metals Trading at High Ridge Futures. Bullion has dipped about 5% since positive reports on COVID-19 vaccines from Pfizer and Moderna in the past 12 days. Gold has mainly benefited this year on the back of damage to economies from the pandemic and the resultant global stimulus. But gold will remain supported as vaccines will take months and months to become well distributed enough to be effective, and the US government is going to continue to be stalemated, said Jeffrey Christian, managing partner of CPM Group. Investors pulled $4 billion from gold, the biggest outflow ever, amid a rush for riskier assets last week, Bank of America said on Friday. While the macro backdrop remains supportive, the key downside risk stems from physical demand and ETP, exchange-traded product, holdings, said Standard Chartered analyst Suki Cooper in a note. Buyers still appear to view price dips below 1860 an ounce as attractive entry levels, and prices have held up well given the size of ETP outflows. Silver rose 1.4% to $24.43 per ounce. Platinum climbed 0.8% at $959.17, while palladium rose 0.4% to $2,334.64. End of article. Okay, good news we hear you say. Gold and silver are up today, but what about Bitcoin? We began mentioning Bitcoin in our weekly updates only quite recently, a couple of weeks ago, as we felt it had been neglected and were given a bit of a heads up, to be frank, that it could very well be on the move once again. That said, we didn't quite expect the size of the rise and the speed in which it has actually occurred in such a short space of time. Now, Reuters have commented upon why it believes this is happening. So let's take a look. Reuters article, dated 20th of November 2020. Updated at 16:30 GMT. Headline, Bitcoin climbs to 3-year peak, all-time high in focus. Bitcoin rose to a nearly 3-year high on Friday as investors continued to scoop the virtual currency on expectations it could well exceed its all-time peak of just under $20,000 or £15,060. Bitcoin surged to $18,766.79, the highest since December 2017, and was last up 4.9% at $18,696. It has gained 17% so far this week, the largest weekly gain since June 2019, climbing more than 160% so far this year. Today, Bitcoin has gotten to a place where institutional investors, banks and family offices are legitimately pondering involvement as a defense against currency devaluation, said Alex Mashinsky, Chief Executive Officer at Celsius Network, a crypto lending platform. He added that in 2017, the rally in Bitcoin was led by retail investors who were early adopters. Because large players like LimeCorp and PayPal are involved this go-around, we can expect more stability than the 2017 bubble. This isn't a gold rush anymore, he added. The Bitcoin market now boasts a functioning derivatives market and custody services by established financial institutions. Large firms, including Fidelity Investments and Japan's Nomura Holdings, Inc., have started safeguarding Bitcoins and other cryptocurrencies for institutional investors. Other major cryptocurrencies, including Ethereum and XRP, which often move in tandem with Bitcoin, rose 7.2% to $505.20, that's Ethereum, and 3% to 31 cents, that's US cents, respectively, being XRP. End of article. So, it's all about Bitcoin and cryptocurrencies. Though for us, we are of course pleased that gold and silver have held up reasonably well. There is no doubt in our mind that some institutional money and private investors' monies have moved into cryptocurrencies, to some extent at the expense of gold and silver, but it is too early to tell at this stage by how much. Now before we go, we'll take a quick look at what precious metal prices are doing. But before we end this video on that, just a reminder that we are producing our weekly gold and silver update tomorrow. And if you're interested in learning a little more about Bitcoin and cryptocurrencies, there is a free resource available by going to the link that we place at the top of the description box below and at the top of our comments below that. The business or organization in question also has a small fee option for some of the products that they sell, and we may, not in every case, we may earn a minor commission from those. But the free resource should satisfy most of your demands or requirements or interests anyway. So without further ado, let's take a quick look at what's happening to precious metal prices, and then after that, the video will end. And we thank you for listening, and if you haven't already done so, please subscribe to the channel. Okay, the time is now 17:08 GMT, and we thought we'd have a quick look as to what's been happening to gold, silver, and Bitcoin. And as you can see, over the last 24 hours, gold in US dollar terms has risen $13 and is currently now standing at $1,873. And if we compare that to the start of the week, and of course we'll be producing this in more detail in tomorrow's weekly update, you can see that compared with, if you like, Friday's close or Monday's just prior to opening, it was $1,889. And if we take a look at silver for today, we can see that silver has risen in the last 24 hours and is currently standing at $24.30. That's up some 38 cents. Though, if we compare it to last Friday, we can see that it was $24.70, so it is down 37 or nearly 40 cents compared to that. But let's just take a look at Bitcoin. For the week, we can see that Bitcoin on the 14th, let's do it in dollar terms. We can see that Bitcoin at Friday was around the $16,000 level. It then fell to about 15.8, and look at this rise. Wednesday, actually peaking at well over $18,000 and is currently 17,937, though we suspect it will be a little higher before the end of the day. Thank you for listening, and do watch out for our weekly update tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.